It's, well, by the time you're watching this, 4 o'clock in London, midday in New York, 12 a.m. in Hong Kong, 3 a.m. in Sydney, 9 a.m. in San Francisco, 9:30 at night in Mumbai. Greetings, good morning, good afternoon, good evening, depending on where you are in the world today. This week's live stream, for the simple reason of curvature of the Earth, is not coming to you live because we're delighted to have a guest from down under in Sydney, Australia. And that's why I'm speaking to you from the dark here on the other side of the Atlantic from Europe. My name is Patrick L. Young, the IPO-VID, a live stream, Series 29, Episode 5. That is in the aggregate. Episode 173 starts here. Let's talk about a few things that have been going on in the parish of exchanges over the course of the last week. Well, NASDAQ, they look to have delivered a final death blow to the putative and heavily backed Texas Stock Exchange. NASDAQ opening a Dallas office. And indeed, that's going to be operating very close to the newly announced NYSE Texas. The country club duopoly have made moves that surely mean the $161 million backed newbie Texas Stock Exchange is DOA. Good news for NASDAQ too in South America. NASDAQ and NUAM, that's the unified exchange across several different jurisdictions there. They're strengthening their technology partnership across CSDs, including Colombia, Chile et al. And meanwhile, MIAX, the Miami International Exchanges Group, with an IPO rumored to be happening soon. Miami Exchanges are buying the International Stock Exchange. That's actually the former Channel Islands Stock Exchange based in Guernsey for $91.5 million US. And finally this week, the nickel nightmare is at an end as the UK FCA finds the LME. But the regulatory chest-beating masks one key point. What was FCA doing as the nickel nightmare unfolded overnight in London time? Our guest today is Max Cunningham. The topic, advancing NSX Australia. Successful former ASX listings boss Max Cunningham is now heading Australia's second market, the National Stock Exchange. With experience across London, New York and Sydney, Max has worked for some of the key big names of the industry, Macquarie, legends from Australia, Goldman Sachs and indeed the ASX itself, where he exited on a high with a record number of 217 new listings in 2022 as ASX set an all-time high number of 2,317 listed companies. Max joined the NSX as CEO in 2024 to develop an alternative listings market for microcaps. Max, welcome to the show. Where in the world are you today?
Thanks, Patrick. Great to be here. I am joining, as you said, from down under in semi-sunny Sydney. But as you can see, it's late evening here. So great to be here and great to be on the show.
Thank you so much for joining us. And it's great to see you. Lovely to interact with Sydney, Australia. Magnificent city, incredible country. So tell me a little bit about, first of all, you. I mean, how did you get involved in this fabulous financial business?
Patrick, thanks for the question. We have a little form that you fill in when you arrive to Australia, an arrival card, and you're asked to write in your occupation or profession. And for 30 years, I've been writing the word stockbroker down, and that's what I identify as a profession. And so my break in the industry was I joined Macquarie when they were setting up a retail stockbroking business back in 1994. So 31 years ago now. It's gone very quickly, and quickly was able to develop a good little retail franchise, and then moved into the institutional business, and was sent to London and spent 7 years there. Helping build out the London Macquarie institutional franchise, and then moved to GS in New York to do a similar thing before heading up capital markets in Australia during the global financial crisis, which I did for a bit under 5 years, and then took a step into the corporate world, which a lot of people at Goldman do after a certain level of working the hours of investment banking, to run listings at the ASX. I did that for the best part of 10 years. We grew the business every year. We focused very much on a few big themes. I would say cross-border listings, particularly out of New Zealand and Canada, and also trying to build a local tech ecosystem. So that's 31 years in an elevator pitch, I think.
Fabulous. And well, what an elevator ride it was as well. I think straight to the top of Crown Casinos or somewhere with an epic view at the end of it. Very, very interesting path. And obviously, I mean, some viewers may not be so au fait with Macquarie, but it's important to say that, I mean, Macquarie to Goldman Sachs, it's like the Macquarie is almost the Goldman Sachs of Australia. I like to think of it. I mean, it's an incredible business, very, very impactful around the world. That must have been a remarkable experience.
I think the extraordinary thing about Macquarie is it is an organisation that has pivoted and grown at key points in the key turns in the financial markets. Macquarie started its life as an English investment bank in 1969 called Hill Samuel Australia, and had a couple of narrow services. And in 1985, the Hawke government, Paul Keating, future Prime Minister, was the treasurer, deregulated banking, and Hill Samuel recapitalised the business to take advantage of that and became Macquarie Bank, and really rode that whole deregulation curve that you saw in Australia, the United States, Canada, and the UK through that late 80s, early 90s period. Really developed the bank on the back of that. But then I think pivoted very, very successfully into infrastructure. We had a huge privatisation push of infrastructure into airports, toll roads and assets like that in the mid-90s. They took that business globally and even arrived, I think, I was living in London working for Macquarie when a lot of people still didn't know who they were, when they made an audacious bid for the London Stock Exchange in the early 2000s, and that really put them on the global radar. The infrastructure boom came and went. They played a key role in that, but then they developed that into a broader global asset management franchise. So I think, Patrick, you're right. I mean, they've hired good people, but they've also hired the right people and moved into growth sectors at key points in the
Well, there you go. Macquarie, a fascinating business all round and really quite intriguing to see. We're talking today. We're having a fabulous opportunity to chat with Max Cunningham. He's the CEO of the NSX. That's the National Stock Exchange of Australia. And we're going to get around to talking about that in just a moment. So, Max, you had this incredible run through Macquarie, through Goldman Sachs, both of them equivalently incredible top-line names. You went to ASX. You spent a decade. You built listings. And then you left and you went to, my goodness, a name that I think, even to be honest, in the stock exchange business, a lot of people haven't heard of, the NSX Australia. What drove that?
Look, I think if you look at what we've talked about, my background in stockbroking and investment banking, it's all been a career around capital formation. And I think what's happened in the last decade, and this is not just an Australian theme, it's a global theme, but in many respects potentially become more pronounced in Australia, there is has been an incredible gravitational pull of institutional money and retail money towards indexing, passive investment, and so goes the money, the data, the indexing. In many respects, so go the stock exchanges. And I think that a lot of the stock exchanges, particularly the leading stock exchanges around the world, have really forgotten what their role is. Their role is to primarily, stock exchanges were established to help companies raise capital. That's their goal, capital formation. And I think when we look at it in that context, a lot of the smaller companies, and it's not limited to Australia, we can look at other markets, Canada, the UK, Europe, even in Southeast Asia, a lot of these companies are left behind. The regulatory burden continues to go up, which means the cost of capital continues to go up. And we have seen probably since the arrival of Sarbanes-Oxley, a global multi-decade trend towards the drop-off in companies being public. Now, that trend took a lot longer to arrive in Australia, but ultimately, we haven't had what I think is a board and a rules framework to enable mid-cap, smaller cap companies raise capital and have access to investors in the same way that maybe North American and European investors have. So, I think competition is a good thing. And ultimately, that was a major driver in my decision to move to the National Stock Exchange of Australia, Patrick.
Brilliant. You're a man after my own heart here, Max. I mean, I'm so excited to hear this, because one of the things that I've been talking about a lot recently is exactly what you're talking about, although I term it the obsession of, or the curse of, super liquidity. Because actually, if you look at what's going on, and I mean, you look at ASX and the options they do and the stocks that they trade and so on, you look at the US stock market, wherever, the liquidity they have in the top tier stocks and derivatives is absolutely off the charts. The volumes they're doing is off the charts. And I totally agree with you. We've ended up in this situation where all those guys are producing Brooks Brothers retail commoditized product.
Yep.
But somebody out there needs to be a little bit more bespoke and manage to help grease the wheels, push things forward and get them happening. So tell us a little bit, I mean, just to put it in perspective, the NSX, that has a fascinating history, which in many ways obviously helped be the catalyst for you deciding that you wanted to run it.
Yeah, look, I mean, the National Stock Exchange of Australia has actually had a long and varied history. Our roots go back, depending on which entity you talk about, to the gold rush in the 1860s, 1870s in Victoria, or more over-the-counter sort of cooperative type exchanges in Newcastle in the 1930s. But we've formed in our current form in around about the year 2000. And ironically, my boss at Macquarie was the first CEO at the National Stock Exchange back in 2000. And so the NSX has had a great history of innovation, but I think there has always been an incredible strength and resilience from the incumbent ASX to accommodate these markets. And, I think that that push, that super liquidity push that you reference, has really only become pronounced in Australia probably in the last 5 to 10 years. And that has really, I think, opened up that opportunity for us to create an alternative market for smaller and micro caps. And maybe now is an opportunity. I think we have a couple of slides, and we've got I think if we put the first slide up, it really, I think, highlights what the National Stock Exchange of Australia is at the moment: a nascent exchange. We've got just over 50 issuers. Total market cap is $2.5 billion. Average market cap is just under $50 million company, $50 million market cap. So I think that encapsulates who we are as a stock exchange. But the important figure on this screen is probably the smallest, and that is our license. There are really only 2 tier 1 market license operators that are active in Australia for trading and listings. And that license is an incredibly valuable asset. And when you look at the pie chart on the side, we've got a good diversity of company sectors. And that has, I think, put us in a great position to really launch an alternative listings venue for Australia, and indeed for other companies looking to come. And if we've got another couple of slides here. If we move to the next slide, this one will actually sort of demonstrate a little bit about what the options are to list on the NSX. Everyone has the traditional IPO path, so we know what that is. We have another path which, not a lot of stock exchanges in Australia have. This is a direct entry path, and I think this exists in some markets like the US and Canada. This is the opportunity to list effectively without a prospectus if you've got a spread of shareholders, a market cap and a track record, but don't need to raise capital. So that can materially reduce the cost of raising capital. And these are very, very important when you're talking about, 20, 30, $50 million companies. The other areas that we're focused on is transferring listings from another exchange. and we're doing that very, very successfully in Australia at the moment. We just this week had our third transfer listing, and we have another 3 that are in the pipeline that we're excited about. Importantly, these companies are able to both not have an AGM. The board can decide that. They can move straight across. They can almost do it in a matter of weeks and commence trading, cease trading on one exchange and start trading on NSX the next day. And where we're seeing big opportunities, Patrick, is through dual listings. As I said, I think at the outset, we've spent a lot of time focusing on dual listings when I was in my previous role at ASX. But there's an enormous amount of crossover between both the Canadian and the New Zealand markets in terms of companies, style of economy, legal systems, transparency, democracy, accounting, language. And I've just returned from a very productive week in Toronto with 2 Canadian listings already. And I think if we can lock that down and execute that quickly, particularly in the mining space, we see big opportunities. We haven't really focused on New Zealand yet, but New Zealand investors are very, very keen. New Zealand issuers are very keen to access the Australian capital market. As I'm sure most of you and your viewers are aware, there is a huge superannuation savings market in Australia, and we want to be party to that. And then if we move to the next and final slide, I think this is just a little case study, but it demonstrates the transfer listings and how we're executing. This company recently came from the ASX, a company called Danakali. This company had a good cash asset base. The incumbent stock exchange was really leaning on them to, I guess you call it, use it or lose it. Use your listing, use your cash, or lose your listing. This is a company that's backed itself in the most extraordinary way by being the first company to move from ASX to NSX and utilize its cash. It's picked up some projected projects in Eritrea and Saudi Arabia where it has deep roots and connections, and equally is likely to get some projects and negotiations underway in Australia. It came to us with circa $30 million in cash. And we are allowing the board and the management of that company with an incredible track record of creating wealth for shareholders to do that in what I would call, a well-regulated environment, but an environment, Patrick, that is, I think, more conducive for smaller companies to cut that red tape and let them get onto the job of actually creating wealth for shareholders.
Fascinating. And that raises a fascinating point, actually, Max, because actually several points. Because I think one is, you talk about it. If I remember correctly, I'm going to try my trivia here. Am I right in thinking that your exchange originally, it included the Bendigo Stock Exchange, or have I got that wrong? What was the...
No, you haven't got it wrong. We acquired the Bendigo Stock Exchange in around about 2006. So, there were the major city stock exchanges, but then there were these what we would call second stock exchanges that existed. There was the Kalgoorlie Stock Exchange and the Bendigo Stock Exchange that were built around the gold rushes, at the end of the 19th century. And the Bendigo Stock Exchange was kind of sitting there with a few companies. We picked it up and actually were able to utilize it for things like, believe it or not, we had a very good little niche franchise at the end of the 2010s trading taxi plate licenses, and that was going very well until this little company called Uber arrived and took away the entire taxi market, not just in Australia but globally, and massively devalued the value of those taxi plate licenses. But I think the Bendigo market is there's a lot of DNA and roots here in terms of how you can do things differently and how you can service small and evolving companies, particularly in that mining sector. And quite a few of the companies, and not surprisingly, the 2 that we've got in train from Canada are indeed gold companies. And what a great time to be in gold in any market, Patrick.
Well, it's a fascinating time, and obviously it's great to hear you talking about Bendigo. Sorry, I'd forgotten you acquired Bendigo. I just couldn't remember quite the whole provenance of the thing. And I have to say, what a tragedy that the Kalgoorlie Stock Exchange is no longer with us, having actually visited Kalgoorlie many years ago. But it's very interesting because what you're talking about there is, first of all, the provenance of Australia as a mining and resources centre. And therefore, really, I mean, there's the Australian market, there is the UK market as an offshore market, the Canadian market and the South Africans have traditionally always been the major markets there. And obviously, as you say, in an era of super liquid, there's a great opportunity to really start working constructively with those smaller mining companies. And actually, we had a fabulous conversation with Richard Carlton, the chief executive of the Canadian Stock Exchange a while ago, who's been doing a very similar thing across various sectors in recent years out of Toronto. And the fascinating bit as well, I suppose, is, I mean, it's important for those who don't know the Australian market well to understand just how dynamic and entrepreneurial Australia is. I mean, it's somewhere between the culture of Europe, being situated on the fringes just beyond Southeast Asia, and at the same point in time having really that American spacious mentality where there are an incredible number of really wonderfully entrepreneurial people in Australia who've done great things in business.
Yeah, well, look, that might be a polite way of referencing Australia's start as a convict colony from the mother country and fringe on Europe. But I do think, having spent an enormous amount of time living, working and doing business overseas, particularly in the UK and the United States and Canada, I do think that Australia encapsulates the best of all of those worlds. I think from the UK, a lot of our laws, a lot of our deregulated environment, not to mention our head of state, all come from those strong foundations. But I think we can never ignore the importance of entrepreneurship and freedom and absolute lack of class system that the United States, the United States is the great startup disruptor that we've seen in the last 500 years. And Australia gets a little bit of the best of that from both countries. And I think for international viewers, if there's a country that I think we're most similar to in the Northern Hemisphere that we probably don't get enough parallels with, I fundamentally believe it's Canada. We have the same head of state. We have a currency that trades very, very closely with one another, in my view, due to the mining background of the countries. I think there's just an enormous amount of commonality and between Canada and Australia, in my view. And I think where you mentioned Richard Carlton at the Canadian Securities Exchange. Again, if the National Stock Exchange of Australia is looking to emulate a stock exchange, and we're always anyone in business who's trying to build a business looks for a role model. The CSE is that model for us. There are so many similarities, and I mentioned them in terms of the nature of the economy, and you talked about entrepreneurship. But the CSE has really created a genuine alternative, in fact, leading trading venue for venture capital in that Canadian market. And we don't have that opportunity in Australia. And in many respects, I think we are trying to incubate the entire venture market in the same way that CSE and TSXV have that space combined in Australia, in Canada. We'd like to occupy that place in Australia, Patrick.
And indeed, let me say that Richard Carlton was our guest on episode 63 of this canon of IPO-VID some time ago. So it's worth catching that. And it's a great point, though, because I think the thing I was thinking of, rather than the convict routes of Australia, is the great melting pot. I mean, what I think is fantastic is it's the country where you've got every possible nation in the Mediterranean. You've got all the people out from the Eastern Europe have come at different times, and all sorts of people that have really made Australia an incredible melting pot. And that's something which I think is quite fantastic. I mean, I used to have a house in Malta, and when we were there, it was noticeable the fact that I think there were more Maltese in Australia these days than there are actually in Malta, because of the way that the diaspora works. And
yes,
looking at that, I mean, you're picking off huge numbers of opportunities here, and that's so exciting. And in no particular order, I'm just remembering them. I mean, obviously there's minerals and resources, which has always got to be a mega kahuna, and it strikes me that gold is a very interesting thing right now, but also silver, given the fact that silver is the thing that goes into every electric vehicle, and we can see from spodumene futures being the latest listing on the Intercontinental Exchange on top of CME and ABAX. Everybody is looking at all of those sorts of rare earths, and particularly silver is going to be more in demand than it has been for a long time. You're beyond the rare earths. You're looking then at, yeah, there's the New Zealand opportunity around about. There's the fundamental Australian opportunity. Let's talk about that actually for a second, because Australia has always had an incredible startup culture. Long before anybody talked about startups or they needed to create incubators and accelerators to put people in, etc. Although I will say, I mean, good grief, what, 25 years ago or more, they took the old Sydney Railway Works and turned those into essentially what was an early incubator accelerator for technology, which I think was a great move. Talk to us about the opportunity in Australia for those very small companies to come to NSX.
Look, I think I think part of the, again, getting back to your sort of gravitational pull and super dynamics around where capital has drifted, particularly towards larger caps in US and other markets. I think Australia has a great startup culture and has a great tech culture and well-educated market, all along the lines that you've sort of identified. And I think one of the things that should never be forgotten, you know, I mean, in many respects, there's a little bit of Israel in Australia in the context that Australians never build tech businesses to build for their home markets. You know, if you go to Israel, everyone is focused on building for global markets because the local economy is too small. And probably the only exception to that in Australia might be fintech, where we have a big financial services sector. But the tech, the software services, and we've seen that with companies like Atlassian and WiseTech that have IPO'd and built wealth at stratospheric rates. We've also seen it, you know, with Afterpay, which got taken over by, which is in the payment space. They got taken over for $30 billion by Square, which is now trading as Block in both Australia and in the US. You know, these are all companies that effectively started as the equivalent of a, you know, as a Palo Alto or a San Francisco garage startup. And they came with Australian entrepreneurs seeing gaps in the market and built large scalable businesses. I think the issue for our market is the pathway for the last 5 years has been mega cap IPO or stay private. And really what we want to do is partner with those companies when they're early stage. Probably the last successful pre-revenue listing in Australia was Afterpay in around about 2014, 2015. We need many, many more of those companies. I mean, that company listed, Patrick, with a market cap of about $40 million and got taken private 5 years later with a market cap of $30 billion. There is that type of opportunity in Australia for many, many more companies. And we want to be partners with that, either in their initial funding or we've got, you know, a robust crowdfunding environment in Australia. We've also got a very well-funded venture capital market. And if we can help those investors find secondary markets and alternatives to raising capital, particularly as they're scaling up, that's where I think the National Stock Exchange of Australia sits in that ecosystem.
Fascinating. And I mean, so many points being raised here. First of all, I must say, you said, I mean, a little piece of Israel in Australia, and I thought you were going to refer to Maurice Newman there. Good evening, Maurice, former chairman of the ASX. If you're watching, a great figure in Australian capital markets. But the the interesting point about what you make here is also how the Australian corporate environment changed in, say, the course of the last 30 years, because traditionally you had a huge number of family businesses created by many different groups. I mean, the Italians, the Greeks, the Lebanese, whatever, and they traditionally were very difficult to get to list. And I mean, you have billion-dollar companies in Australia privately held, which I can recall every year ASX would be making this sort of pilgrimage rather to go and see them, just in case there was a chance. Now, two questions come out of that. I mean, first of all, obviously you've got the point. Early stage tech companies, capital adoption, totally different business. They need capital, so therefore they're going to come to some sort of an environment faster. So you've hit on it twice. Private markets. First of all, is that going to be an interim stage, do you think, for the tech companies? And second of all, as we all get older, the generational wealth thing is coming in. Do you think you're going to see a private market opportunity for some of these traditional Australian family business, or indeed Antipodean, because New Zealand is the same thing, traditional family businesses?
I think that's inescapable, Patrick. You know, I think that any stock exchange that's not thinking about private capital, and we have a very active regulator in Australia, the ASIC, which is the equivalent of the sort of SEC, is spending an enormous amount of time talking about this in the public domain. Why aren't companies going public in the first place? Secondly, how and what is the transparency around those valuations? And then finally, I would say, you know, a lot of these companies are family companies, but they have employees or they have legacy shareholders that are looking for liquidity points and they're looking for pricing transparency. And that is absolutely somewhere that that we want to be in for sure.
Fascinating. So this gives us a whole realm of very, very exciting opportunities. And also, of course, I have to say, there's one company you haven't mentioned so far. I think, unfortunately, we've got to accept the fact that they're just not going to go to the NSX, though. But in terms of Australian mega successes, you've got the darlings of, you know, inner Sydney. I mean, Canva. Somebody who, you know, there you've got a starter, turned down, classic story, turned down by 150 funders, turned into a gazillion-dollar business. And our friends who are watching today at NASDAQ and NYSE are being triggered because we know that both of them are in a battle to the death, a gladiatorial conquest to try and get their listing, which I think is going to just completely disappear straight out of the Australian market when it goes public. But an incredible example of what Australia can achieve.
I think it is, but it's also a example, I think, of lost opportunities. And I think that we can't ignore the scale of the US capital market, for one. And secondly, the incredible depth of knowledge that exists with those US investors in terms of how to value these high growth rate businesses and put a multiple on them. That Australian investors, quite frankly, Patrick, struggle with. So, I think Australia is still a market that has a big focus on short-term cash generation, how that cash is deployed, if you look at the case of Atlassian, you know, these are companies that are more in a US mold in terms of how they redeploy cash and are investing on a 5 to 10 year view. And Canva is unreservedly in that camp, and may well even exceed the mentorship that they've had from Atlassian, both from management and Atlassian shareholders, in what that opportunity looks like. But hey, Canva, if anyone's listening, NSX is open for business if you want to do a secondary listing.
Well, it's a very good point. And actually, let's get into sort of some of the nitty gritty, just so that everybody understands it. On NSX, explain to us, one, how you then deal with settlement. And second of all, just give us a little idea about what your broker network looks like in terms of the distribution of NSX.
Well, look, on the former, our settlement, clearing and settlement in Australia is national infrastructure. So you, Patrick, on multiple podcasts have opined on ASX and some of the challenges they've had with CHESS. Now, look, chess, I think we agree, I'm not the person, and this isn't necessarily the forum today to have that debate. It's got its challenges, and we saw some of the challenges, and you highlighted this at the start of the year with regards to the pre-Christmas challenges that they had with that system. But at the end of the day, they are the infrastructure. We are plugged into that, and that means we are fully connected via ASX and their broker network for all clearing and settlement. That's a great asset. That is, in my view, a national asset, and we seek and look for it to be deployed in that way. And over time, that is evolving in that format as national infrastructure. Our broker network is, I would say, evolving. We don't have what you would recognise as universal connectivity. We are a distinct stock exchange with distinct participants from the incumbent board, but I'd say, have got great strength and punch above our weight with what we would call old-fashioned stockbrokers, the type of stockbroker that I used to be. These are brokers with clients that you speak to in real time, clients that are open and receiving research ideas and stock ideas. And we have a large number of what we would call those active brokers connected. So most of the West Australian, and we have all the West Australian brokers connected. We have the biggest retail broker, Morgans, in Australia. We have a Canaccord, which are well connected into both Canada and the Australian market, and a range of East Coast brokers. We are a little short on the online brokers, and we are looking at ways to address that. I think the biggest thing, to be honest, Patrick, is we are looking over the next 12 months at the adequateness, for want of a better word, of our current trading platform. Our current provider contract is up for renewal in the middle of 2026, and we are likely to either evolve that to a newer platform or move to a new vendor. We've been very open with brokers around that, and the online brokers obviously keep a big eye on both technology and cost crossover. And they're using that as an opportunity to revisit when and how is the time to connect to the NSX.
Very interesting altogether, and obviously it's good because, also I should say that when you're talking about East Coast brokers, you mean the East Coast of Australia, I'm presuming, rather than, which is Sydney, Melbourne, and all of those wonderful fine cities all the way up to Brisbane. And of course, the West Coast of Australia, which is, that amazing mega state, which is larger than what Japan, California, and umpteen other countries put together, but only has the population of Estonia or Northern Ireland, the great state of Western Australia, but nonetheless has this remarkable history of investors coming out of there and entrepreneurs and mining gurus. So tell us then, obviously there's a lot happening within the business as you develop going forward. Certain areas you're obviously going to be dependent on what goes on. And yes, indeed, the chess replacement story with ASX, #it's complicated. If you want to understand that better, drop by exchangeinvest.com and subscribe, ladies and gentlemen, and you can get all of the hideous fiscal pornographic detail of just what's been happening. Not for this conversation, but looking at NSX, obviously, one issue for me has got to be, Max. First of all, tell us, how many people are on the team at NSX at the moment?
Look, we've got a tight team, as you would expect for the number of companies that we've got. We have got about 10 staff. That includes full-time employees and a couple of consultants. But our opportunity to scale that up as the business grows is very quick and very reflective. And then we've got a very, I would say, active board as well. So we've got four directors on our board, and they've been great partners in the business in terms of the growth initiatives and getting the word out there in terms of being great ambassadors for NSX and our growth in the future since I joined.
Well, I think that's great. And let's face it, You don't need more than a dozen people to run a remarkably hefty business in the world of stock exchanges, given technology, particularly if you've got a lot of outsourced technology. You're not running settlement. There's no reason that you're going to need more people. I mean, it's the folly that this is a cast of thousands business. But at the same time, obviously, the excitement is the opportunity. You mentioned Uber coming in and destroying the taxi plate market, unfortunately, out of Bendigo. I mean, a shame for the exchange. But hey, it's great, isn't it? This is the age of the exchange. And there we saw an unregulated exchange, Uber, demonstrating what you can do with the power of that network. So the thing that fascinates me is when you wake up in the morning, Max, first of all, you obviously must be offering a great deal of gratitude in your morning manifestations towards the opportunities you have. But how do you put it in order? How do you prioritize what you're going to be going after, first of all, because obviously you've got limited resources to capitalize on that?
Yeah, wow. Well, what a how long is a piece of string question. Look, I think for me the challenge. So first thing is, our fastest way of picking up listings is transfer listings, because as I highlighted in the second slide, it's a relatively seamless process. You can move across quickly. It's low cost for the issuer and low labor intensive for us. So I think at the moment, Patrick, a lot of effort is filtering through those companies, finding the companies that we think would enhance our market and are going to be sort of effectively facing maybe, not quite the level of love that they should be getting, or exposure on the incumbent stock exchange. So that's priority one. I think the second thing, so that's day to day, that's bottom up. Top down, the other focus is our biggest enemy, Patrick, is awareness. At the end of the day, opportunities like this, being up in the middle of the night and talking with you about how we raise the profile of the stock exchange. I mentioned, and you mentioned, I should say, Richard Carlton and the CSE. They look very similar to us 10 years ago, and I think that they had a couple of breakout moments, and we look for what those opportunities might look like. One of them, was the legalization of cannabis in Canada, and those companies seeking to access capital. And the second was what we're doing, transfer listings. So for us, we see digital assets as being an asset class that's being ignored locally and sought after by investors. And I think, quite frankly, there's the broader regulatory environment is not serving those investors, because they're often it's an asset class that opens itself to scams and people being actually ripped off. There's lack of transparency. Who's the partner that you're dealing with? We would much prefer to be, with our license and our technology and our transparency, a market that those companies can access. So I think on the awareness front, there's a little bit of media like this, a little bit of engagement with regulators, and most importantly, we can never ignore the important factor of ultimately, most of these opportunities come, whether I've been at ASX or here, through stakeholders like law firms and investment banks. So it's a little bit of a two-way direction, but there is absolutely no doubt that I have my door-to-door salesman hat on every day, and ringing the bell directly of some of those small companies and finding out what they need from being listed, and if we can help their listed experience be better.
And actually, that raises a fascinating point, because, your predecessor as CEO, I think, did a great deal behind the scenes in improving the plumbing, if I can put it that way, of NSX. And Anne Baring did a lot to really make sure that everything was wired together. When you walked in, obviously that provided something, because if I may say so, you are a kind of listings rock star. People around the world know who you are. You've got an incredible reputation. It's relatively rare that someone would make headline news as the head of listings, yet you've been featured frequently in the Australian Financial Review, which is the Financial Times Wall Street Journal of Australia, for those who don't know it, or the Antipodes, in fact. it's got to be great for you because you do have that mega Rolodex of all these people who have been listing in the course of the last year. I mean, that's hundreds of people alone, let alone all of the other people that you meet through your stakeholder network and the law firms and the investment banks, etc.
Look, I couldn't agree with you more, and I think this has been a business. This is building a stock exchange is not a business that you do overnight. And the legacy in many respects, I think, Anne really stabilized the business. She put some great foundations in place. She put some good people in place. And that has been, in my view, the foundations on which we build. And obviously, Anne has had a great career subsequently with an Australian business, but with a global franchise, Computershare, and now heads up that North American operation out of New York. And I think my background, again, thanks for your kind words, but the reality is I think that CV of having worked as a stockbroker, an investment banker, and worked at a stock exchange has given me probably a pretty unique insight in Australia in terms of how capital forms, what investors want, and the ASX experience about a strong, solid regulatory environment, both from a rules framework and execution framework, and also, how to deal with regulators and policymakers.
Yes, there is the entire series of ingredients that all need to be mixed gently at the same time without managing to spoil the pot, as it were, in order to make your exchange work. And it obviously becomes a fascinating position for you going forward. So explain to us, a little bit more in terms of what do you think are going to be the key steps that are going to move forward in Australia? Are you worried? Well, actually, let's talk about one thing. Are you worried about trade and tariffs at the moment? Because obviously that's a huge concern when you talk to anybody in Canada, where you've been recently, if you talk to people in the likes of Europe. How's that impacting the overall outlook for the NSX?
Look, I think for NSX and Australia in general, I think it is pretty limited at the moment. I think you have not seen a big move in the currency. Australia is one of the few countries that is running a trade deficit with the United States. So the United States for 30 years has made a profit from dealing with Australia. And if you look at what the administration is seeking to do with some other trading partners is to balance that ledger. That is an argument probably for better qualified people than me, macroeconomists and also geopolitical specialists. But from an Australian perspective, I think we can only deal with this on a day-to-day basis. One, the tariffs are on the table and there for discussion. Two, there are a large number of American companies that have big assets in Australia that actually export to the United States. Now, you have to have an equality on what that tariff is, but if you look at Chevron and LNG, and if you look at Alcoa and aluminium, they are two prime examples of raw materials that get shipped back to the United States. There are other assets that get exported, but look, I think this thing will run. Australia is not currently putting retaliatory tariffs on the table, and there are trade emissaries from both the United States and Australia that are working through these issues, and the market is currently, Patrick, not putting a discount or any punitive action on how this is likely to be received.
Well, that's encouraging. That's great news all round, Max. And tell me, on the micro, just give us a little heads up here. There's been this interesting kerfuffle. I don't quite understand it. New coal. Tell us a little bit about what's been going on there, because that's obviously suddenly come to the attention of, Romania has the Tate brothers. Australia has something that's commercial, new coal.
Yes.
What's going on there?
Well, New Coal was our second transfer listing. They moved and started trading with the NSX under the ticker NCR NSX about 3 weeks ago. I was actually in Toronto the day they started trading with us. And look, I think it's a funny little story. They were effectively a coal operator. They'd won they bought a franchise from a consortium that was subsequently found to have won that coal lease corruptly. And the state government confiscated that, and they have been in litigation to get compensation for that for probably, I think, well over a decade. Maybe it's been nearly 15 years, Patrick, since that process has been underway. Now, they have really challenged. They were challenged with their previous listing on the ASX because if you actually look at them as a piece of paper, they've got a little bit of cash, they've got some operating coal prospects, but their biggest potential asset is they're almost like a call option on litigation or compensation on that coal asset. Now, perhaps fortunately for New Coal, they had quite a few US investors who were part of that consortium, and those investors, Patrick, seem to have got the attention of President Trump and his tariff negotiators, and they have actually put compensation for those coal tenements on the radar for tariff negotiations. So there has been press this week in the, as you called it, the Australian version. That's it. That's the Australian version of the FT, the AFR. And even today, we've had a subsequent article in the Sydney Morning Herald, and indeed, the former Australian ambassador to the United States, Joe Hockey, who runs a lobbying firm and has a good personal relationship with President Trump. In the former administration, he was a regular golfing partner as the president while he was ambassador, has even come out and got involved in this process. So we don't give or seek financial advice, of course. We're a stock exchange, but it certainly is one of those breakout moments. It's certainly an opportunity for New Coal to have joined us at a very fortuitous time. Look, it is a micro cap. It's trading at a market cap of $3 or $4 million. But if you read the press, if there's even a sliver of compensation there, then there is a real potential for a re-rate of that company.
And that's fascinating. And actually, you take me back there, because obviously Joe Hockey, the Minister for Financial Services in the Howard government all the way
Correct.
back about 20 odd years ago. And he really was a driving force for internationalizing and expanding the Sydney and Australian Financial Centre. I can remember very well. So good to hear that he's still in great form and doing well. Now, look, you've got all of this opportunity. You've got all this incredible business. I got to ask you one thing. Can you expand to take all these opportunities generically, with your own resources, or do you think there's going to be your own case of you're going to be looking to add capital to the NSX business as you go?
We're a public company, Patrick, and so therefore our accounts are public. We have had an illustrious career of losing money. And my job is to stabilize the ship and build on those foundations of some of the previous CEOs that we've referenced today. So, look, I think there is a short and a long answer to your question. The short answer is the initiatives that we're taking around transfer listings, the initiatives that we're undertaking in terms of doing dual listings with Canada, and the initiatives that we're undertaking to replace our tech stack. And our opportunity to potentially provide additional services in and alongside that, I think, and my goal is working on a 2 to 3 year timetable to balance out those losses. We're not giving guidance to the market on what that looks like at the moment, because literally it is hand-to-hand combat of winning a listing at a time. But collectively, that's an opportunity. Now, that was a long, short answer. I appreciate that. So maybe I'll give you a very short answer to the long part of the question, and that is the future. The license gives us enormous opportunity. We need to probably raise a little bit more capital to extend our bandwidth and our length in terms of how long we can lose funds for, and we are always looking at what those opportunities might be with existing investors and strategics. Our view on that, Patrick, is there are a lot of products that are available to North American and European investors that aren't available in Australia. In the ETF space, in terms of equity and leverage products, there's a greater opportunities for market maker utility in Australia, amongst many, many other things. And you've touched on it. And again, I think that the private market opportunity can't be ignored. So there where we need to dedicate more bandwidth and headspace, but we are not there yet because we simply don't have the capacity to address that. So look, when you're a CEO, the job is really thinking about how do you best utilize the resources short and medium term, and those other opportunities that I've highlighted as long-term opportunities. We need to look about how we fund that, and if we're going to fund it internally, it'll be a much longer journey.
Max, I think you've outlined everything perfectly there. So it only remains for me to ask you that final question. Max Cunningham, where do you think the capital market revolution goes next?
Well, I've watched the show and I knew this question was coming. And unfortunately, we've preempted it a little bit. I've talked extensively about this in the local media, and I think it's hard to ignore, and that is private capital. Okay, this is a multi-decade structural shift that is occurring in all markets, and you ignore it at your peril. We can't just say, we want more companies to list and say, it will happen. We need to look at why they're not listing, and some will stay private, and if they can particularly meet their funding opportunities privately, which a lot of them are doing because of the success of private equity and venture capital, then they will do so. And you talked about family companies and family money as well, and that transfer of wealth. But that doesn't mean that there's a group of private companies that previously would have sought to go public. And so how do we work with them to access forms of public capital? Now, that might be periodic trading, that might be periodic reporting, that might be wholesale investor only. A lot of these are ideas that we've got, that we're bubbling away on and working with partners on, and I've explored in different capacities in the past. So we may or may not jump into that space, but every stock exchange and every corporate regulator in the world is thinking about this, and those that aren't are asleep at the wheel and deserve to have their franchises chipped away at.
I am all for chipping away at the franchises of those who are asleep at the wheel. This has been a marvelous conversation, being able to profile the NSX of Australia. I think you are clearly the plucky upstart in the land of the great Aussie battler. I wish you every success going forward, Max. It's been a joy to chat with you. And actually, I really hope we'll have you back in the near future and we can talk more about where things are going well for you in due course as you start to really turn this business and move it forward. And it's been a joy having you in the show. Thank you very, very much. I just want to say a huge thank you to our production team today, AJ, Janella, and Kim, for doing such a smooth job. IPO-VID will return. As you're watching this, I'm actually somewhere in the middle of Asia. In fact, that's why we're pre-recording this. So I'm on a fabulous sojourn for the course of the next 5 or 6 weeks. And I am looking forward to that. Although tragically, this year, I'm not going to make it as far south as Australia. Hopefully that will happen in next year's Asian trip, if not before. My name is Patrick L. Young. I want to say thank you very much for watching this show. Catch up the daily blurb of the world of bourses. The business of information of bourses is, of course, the water cooler of the bourse business. Exchange Invest at exchangeinvest.com. My name is Patrick L. Young. Wish you all a great week in life and markets. Thanks for watching IPO-VID.
Thanks, Patrick.